This short video is a great example of the fact that most people are completely unaware of problems that exist in their estate plan. Specifically, I'm going to talk about IRAs. If you're an individual with an IRA, I'm going to show you how to leave your entire IRA balance to your children instead of sharing part of it with the tax man. If you're a church leader, this information can help you build your endowment fund so that eventually you're operating your ministries from the earnings on the investments in your endowment fund instead of counting primarily on pledges. Now, most people who are retired probably have an IRA because when they retired, they rolled their 401k plan into an IRA. Now, what they'll do is they'll continue to draw income from the IRA during retirement, and when they die, they'll typically leave the IRA to their spouse, who'll continue to draw income and then leave the IRA balance to the children at their death. Now, let me tell you about Bill and Ann. Bill owned a trucking company and was a pillar of the community. A few years ago, he sold his dealership and retired. His wife, Ann, taught school for 35 years. Bill and Ann live in a home that's increased in value over the years and have a number of investments. And Bill also has an IRA that's worth $1 million. Now, what Bill has done is named Ann the beneficiary of his IRA. If he dies first, Ann will simply rename the IRA in her name, change the beneficiary to the children, and continue to draw income from the rest of her life. And this is a typical plan, but it's a tax disaster. An IRA is one of the worst assets to leave to children because there's two potential problems. First, the IRA may be exposed to estate taxes, which start at 45%. Bill and Ann are in that bracket, so right off the bat, about half of the IRA goes to taxes. Second, an IRA is subject to ordinary income taxes in the year the IRA is inherited. So in addition to having to pay tax on the IRA proceeds, this likely will bump the children's income tax brackets up and result in higher taxes on their salaries. Now here's what Bill and Ann's current plan looks like just with respect to Bill's IRA. Out of the $1 million, the children are ultimately going to receive $357,500, only about 35%. The IRS is going to get $642,500, and Bill and Ann's church is going to get $0. Here's the result when Bill learns how to solve this tax problem. The children are going to get the full $1 million, the IRS is going to get $0, and Bill and Ann's church is going to get $1 million. This one planning technique is especially important because the Treasury Department estimates that there are currently $3 trillion in IRAs, and close behind are 60 million baby boomers, the oldest turning 63 this year, with $12 trillion in retirement plans that will likely be rolled into IRAs. This is Bob Cavanaugh with The Smart Giver.